Okay, let's go and get started. Good morning, everyone. Happy Saturday. It is August 27th, the day after the bloodbath that we just had on the markets yesterday. Hope you made money because puts was obviously the play right after the speech was done. It was a very short speech, right? For a very highly anticipated, and I mentioned to you guys earlier this week that this was going to be a big speech from Powell at the Jackson Hole and really determines the direction of the market, at least for the next several days until, new events come out and this markets move on from his comments. But very direct comments from Powell. And in addition, we'll take a look at that and we'll take a look at charts this morning as well on the major indices and and tech stocks and whatnot. So it is 10:01 a.m. Eastern time. So let's go ahead and get started. If you are on YouTube, feel free to type in any questions here on the live stream. If you are on Zoom, feel free to send out a question as well. I have everyone muted for now. So let's go ahead and get started. All right. So, I mean, what can you say, right? I mean, Powell lays down puts the smackdown on the bear market rally. As you know, we've been rallying from the June 16th lows. Let's say, for example, the Qs ran up to about 335. So earlier this week, and we've pulled back significantly down to 306 at this point, based upon his comments. He talked about lessons learned. Okay, that is really dire and very hawkish as well. So let's take a look at some of the comments that he said in his opening in this opening speech. And he said, "Today my remarks will be shorter, my focus narrower, and my message more direct." If you guys were watching the 5-minute chart on the Qs, and pretty much right when he said that, the market went south really quick. And as the speech went on, yes, you had a big green candle coming back, hoping that he was going to be that was going to be the end of the hawkish speech and he was going to say something positive and be more dovish. And that certainly wasn't the case. He went on to further say, while the lower inflation readings for July are welcome, a single month's improvement falls short of what the committee will need to see before we are confident that inflation is moving down. So as you know, what he's referring to is the July CPI and the August CPI. Both came in lower, showing that and also PCE, by the way, inflation has cooled off. But what he's saying here is that it's not satisfying enough and more needs to be done. If you look around, look at other economic data, such as non-farm payrolls, has gone up. If you look at the housing market, home sales, yes, that's come down a bit. Okay, mortgage applications are down, new home sales are down. Those are positive things for the feds in terms of cooling demand and getting people to stop spending money. Okay, so that's their aim, and it just reminds me of the quote, don't fight the Fed. So but unfortunately, the non-farm payrolls are up still. Spending is still up. CPI does show cool inflation, but it's not enough for the feds to be comfortable going forward. He also said, and I said then that another unusually large increase could be appropriate at our next meeting. He's referring to the next meeting late in September. Okay. As you know, we do have another set of CPI data coming out on 09 on 9/12, September 12th, and I believe the week after the FOMC meets again. Now, the Fed future rates are pricing in at 75 BPS, okay, basis points increase for September. But that largely depends on whether we see another set of cooling inflation on the core and the CPI coming up on September 12th. Because if it does, it could signal some type of pivot. But what he's saying here is that they're not going to, all right? Whether you want to take his word for it or not, we'll see. It really is data dependent. But if you just watch watch his demeanor and his tone yesterday during his speech. He did not smile one bit. He did not look up one bit. He looked down and read his speech and got off the stage, which was really interesting. Last quote that I found interesting: we are taking forceful. This is the first time he has used that. In my opinion, in my belief, this is the first time he used that word in his public speeches. And rapid steps to moderate demand so that it comes into better alignment with supply and to keep inflation's expectations anchored. Okay, so he is also talking to the market. He's also talking to the stock market participants, saying, hey, we're not going to pivot, or it's not likely we're going to pivot, so stop running up the market. So this is a really interesting, really interesting speech. And of course, that just set off a panic throughout the market yesterday. As you saw, the Dow down 1,000 points, the Nasdaq down 500 points, S&P 5 down an ungodly amount. I forgot what it was, but I think the message was loud and clear from the Feds yesterday: do not fight me. Don't fight me on this. I am going to bring down inflation, and rightfully so. But see, the problem is, my personal opinion, he should have said this. Okay, he should have said this back in June. He should have said this in May. He should have said this in March, because because if he said that back then, we would not be in this moment. We would not need to have this kind of market conditions that we're having. If he just said it even in the June lows, okay, the market would have been fine with it. But now he's talking about lessons learned, 3 lessons learned throughout all of this. Okay, so he is also admitting the fact that, hey, we screwed up, right? Plain and simple, we screwed up. We were not ahead of the curve, and now we're going to bring down the market. So but see, here's the thing. If the September data comes out and it's still, consumers are still spending, labor market is still strong, that goes against the will of the Fed. Okay, so we'll see what happens in the next few days. Now, with that being said, that's enough about Powell. Let's go ahead and start taking a look at the charts. If you remember this chart, this is the S&P 500 percentage of stocks above the moving day, 200 moving day. And this is the chart that's meaningful for me, right? Because we had some type of panic selling yesterday, where the Q literally swung almost 16 points from the 322 down to 306 yesterday after hours. I get that. I get that panic, right? Because the market is just like, no, Powell is just going to do something crazy. Is he going to do an emergency rate hike? Market's just, panicking, right? But if you look at the context of yesterday's dip, all right, is it terrible? Is it meaningful enough for us to say that, all right, we're just going to go to a new low, or we're just going to hit, NASDAQ is going to, or the Dow might even hit the bear market finally, okay? Or the NASDAQ is just going to climb deeper into the bear market territory. If you look at the 2018 COVID and the June 16th low, S&P 500 percentage of stocks above the 200-day moving average, yes, we are taking a dip, but it's not meaningful enough to say that, hey, we're just going to be completely bearish from now on, and we're just going to be cashing puts every single day. And I'm going to show you on the charts why I think that way, that, it's just not going to be smooth sailing puts all the way down for the next at least 1 to 2 weeks, because as we head into September, historically speaking, the S&P 500 does perform the worst in seasonality in September. But we have this September is a little bit different, right? We have FOMC and we have the CPI data coming out, and we're coming off the highs here from the June 16th low. All right. I want to remind you what I said last week. Okay. By the way, I'm not trying to preach my bias. I'm not trying to tell you guys what to think. I'm just giving you my personal opinion. It's not financial advice. But if you remember what I posted last week from Dean Christians, is that the number of S&P 500 stocks trading above the 50-day moving average remains depressed at 2735. A surge above 90% would most likely mark the end of the bear market. And I still kind of stand by this set of data, which was presented last week by Chavaco Capital. And we did pass that 90%. Now, obviously it only speaks to odds, right? It only speaks to the fact that the odd that, hey, the bear market is finally, the bottoming process is in. We may or may not see a new low. So I'm going to stick to that until things starts changing, and really kind of comes down to September. If we look at the oscillators, let's take a look at some oscillators here. This is a NASDAQ composite, and I'm using the weekly. This is the weekly chart here. This is the Bollinger Bands. All right. If you don't know what Bollinger Bands, please go Google it. We hit a near high here, probably, I think earlier this week, right? Or last week, up to approximately over 13,000. Okay. And we're pulling back. And this pullback has us down to the middle band here at 12,000. So what we need to see going into this week is that 12,000 mark actually holds. Right now we are at 12,413, right? If that 12,413 actually holds, I think we see a temporary relief, okay, in terms of maybe consolidation, maybe some sideways movement. Like I said, it's just not going to be smooth sailing like what you saw on Friday. Now, Monday could be a little bit more selling pressure into the pre-market. I would not be surprised that we open NASDAQ down at about 12,200 or so overnight, only because the panic or the momentum usually carries over into the next day, especially going through over a weekend. But if you look at the lower band here, the lower band is signaling that the potential bottom of this dip is at 11,500 mark. Let's just say, right under 11,000, which would be higher than this low here back on the June 16th. Okay, so am I presenting bullish bias? No, I'm giving you facts. Okay, next, let's take a look at the daily. Okay, once again, this is the S&P 500 daily Bollinger Bands. Okay, and you can see that we have reached on this little I don't want to say the word capitulation, I might get in trouble, but we dipped down to about 4,000 on the S&P 500, right? 4057. All right, so we're right at the lower band. Now, I'm not saying that lower band's going to hold, but if it does, then this could signal, at least for the time being, that we are at a low, okay, in this particular downturn. If you look at the S&P 500 weekly, this is the S&P 500 weekly, obviously shooting stars here, shooting star here, shooting star here. Both instances, these shooting stars did represent a new low. Okay, so from point A to point B, point A to point B, point A. So far, the middle band is holding once again. If you look at the S&P 500, once again, daily, I already posted this, but once again, you get my message. It's right at the lows of this Bollinger Band. If you look at the history, at least for this last 12 months or 11 months or so on this daily chart, you can see typically the Bollinger Bands on the low side has typically held throughout all the rallies and the dips, okay? And also the upper Bollinger Bands as well. So going into this week, am I bearish? No. Am I bullish? No. If you are in TRT, our motto is play the day, all right? Whatever the day brings, have no reservations. Obviously, you want to take a look at levels, which we're going to do shortly, to see where we could be fading or shorting the rips, if there's any rips going into Monday, or should we be buying some dips too for long term? All right, let's keep going here. Calendar of key data and events going into this week. A couple of things to know. We do have a housing price index. The market doesn't really care too much about that. JOLTS job opening is a decent one. The Fed Williams does speak at 11 a.m. Eastern. This is all Eastern time. Excuse me, on Tuesday. On Wednesday, you have more Fed speakers. All right, Fed Meister speaking, discusses economic outlook. ADP employment change at about 8:15 a.m. on Eastern time here. Initial jobless claims on Thursday. All right, that's going to be an interesting one. And of course, Friday, you get your change and non-farm payroll, private payroll, average hourly earnings instead of factory orders. These typically don't have much bearing on the market. It's this, and this. that could potentially move the market or sway the market one way or another. So if you are going into this week thinking that there's going to be a major bounce, well, you're probably going to be wrong. And if you think you're going into this week with cash puts everywhere, then you're probably going to be wrong too, because there likely will be some bounces on some data or even Fed comments. Okay. All right. So finally, with that being said, this is a big moment going into September. We have the FOMC meeting on September 20th and 21st. The rate decision will be on the 21st, most like obviously at 11 a.m. Pacific time, 2 p.m. Eastern time. They'll release the rate decision. The market at this point, in my opinion, is factoring in, all right, or pricing in a 75 basis points. I don't think Powell is going to be 100 basis points kind of guy in September. And let's just say this data comes out on September 13th, all right, let's just say this comes out over 9% again. Okay, this is year over year CPI. If it comes in at 9.1 or above, yeah, the market's going to start pricing 100 basis points. All right, but if it comes in lower than 8.5, be prepared that the market's going to bounce. Okay, the market's going to bounce and it's going to factor in 50 basis points. But if it comes in, let's say stubbornly high, all right, and a little higher than this, 8.7 inline forecast, then the market will be like, okay, 75 basis points is most likely going to be we'll start to price in. And at this point, we're pricing in that 75 basis points. Okay. So that's my opinion only. You may not like it. All right. But that's what it is. Okay. So with that being said, let's go ahead and look at the charts. Let's start with the Qs, my favorite. If you are a part of TRT, you know that we trade the Qs most on a daily basis. Some of you guys like SPY, SPX. That's entirely up to you. I just love my Qs. All right. So big, ugly, engulfing red candle. We totally get it, right? Wiped out a week's gain, wiped out nearly down to 306. Okay, so let's take a look at key support levels. We are well below all the my daily EMAs, 915, 3450, as you know. So looks like so far we're going to see more selling pressure going into Monday. Some key areas to watch for is 302.67. You have a support here from the July 28th lows. Below that, yes, you're going most likely under 300. So 298, 295 would be my targets under that. But guess what, folks? You do have volume support here. And this has been a hot contested area. If you notice from the June 16th lows, okay, it hits this area, comes down, hits this area, comes down, and we finally broke through what on July 19th. And that's what triggered this bull run. All right. So this volume, all right, if there's no terrible news going on in the market, I do not expect us to dip below the 293 mark or even 290 headed into FOMC meetings, headed into the CPI on 0912, because I do believe this is going to be key support. Now, anything obviously can happen. We could dip below that headed into it, but I'm just not seeing this happening because of this volume support. But if it does, oh, well, here we go. Then it's most likely going to hit the 280s once again. Anything that goes down or anything that goes up, if you've been experienced in the markets, it's not going straight down, folks. Okay. Yes, we're going to see some selling pressure pre-market on Monday, but I do expect that the bulls is going to step in and claim that 300 level. All right. If we get into that 300 level, you'll see a bounce. I'm not saying it's going to be a crazy bounce. What I am saying is we're going to start we're starting to trade sideways. You might get maybe a bear flag on the daily or the hourly charts before it goes down a little further. But at some point, I do think that 300 mark is going to hold. And if it doesn't, then I'm looking at this area for potentially dip buying. Okay, so that's your cues on the daily. All right, let's go over the weekly chart. All right, you can see on the weekly chart we've been on this run up here, the stochastics is starting to curl down. Okay. And when the stochastics are this overheated, and we did get here about 2 weeks ago, it's starting to come down. And also your CCI commodities channel index is starting to head downwards as well, giving you a short signal. I totally get that. Okay. But these things typically, it takes time to come down. You'll see bounces. Okay. But typically, if you're looking at, what's happened in the prior times, okay, on the stochastics, they can remain elevated for some time. Okay, they can remain elevated here too. Okay, but at some point, yes, in the future, it's got to cycle back down, just like with the Qs on the daily. If I go back to the daily chart here, all right, you're looking at oversold territory now. It can remain down here for a while, just like it can remain overbought. All right. If you look at what happened in June, we chopped around here for a good several weeks before the stochastics actually started to curl up between the D and the K line. All right. So, we'll see what happens here, but we are oversold. CCI is signaling oversold as well. And this is actually pointed downwards. All right. So that means, yes, there's you can see that there's going to be more selling pressure here. And one more thing that needs to be mentioned, all right, is that once again, I'm not giving you a bull bias. I'm not giving you a bear bias. I'm saying that the volume was pretty darn good on Friday in terms of the sale. So that is obviously not good if you're a bull, right? Because higher than 20-day simple average moving volume, all right, much higher, brought into panic, okay? But once this panic sets in, all right, you'll start to see some choppiness, right? Look at this volume. Look at this volume, okay? Look at this chop, right? Remember back on May, the choppiest markets ever traded during May, right? Once you get a big old red candlestick, everybody wants to buy puts. Looks what happened. It burns both sides. Yes, it does make new lows. I totally get that. You can probably have to buy long puts if you like, but scalping on a 30-minute basis, it's going to get chopped around. All right. So I'm not expecting this kind of candlestick going into Monday. You might see a little bit of doji here. All right. Some indecision to hold the 300 mark, and we'll go from there. All right. All right, cool. Let's go ahead and go over to SPY, our favorite, right? So SPY, you don't have a ton of daily. It went through the volume shelf really rapidly on Friday, right? We're headed into a volume gap here. Okay. You don't have a ton of supply until 393. So yes, yeah, downward target 401.74 needs to hold on Monday. If not, then we're looking at 390, potentially 398, right into this shelf here about the 303.92 area. And I'm not saying that's going to happen on Monday, but I'm saying it's looking that way. On the SPY and the S&P 500, we do have a gap that needs to get filled at 378.98. Okay, but gaps do get filled, right? It's just a matter of timing. It's just a matter of timing. Sometimes VIX gaps don't get filled until years later, okay? Sometimes these gaps don't get filled for months down the road. So we've seen that this gap has not been filled dating back to July 18th, July 19th. So it's been about a month, at least a month and a half. So we may see it come back down here to fill this gap, all right? But does that mean we're gonna make a new low down here at 362? Well, that remains to be seen. And of course, we can't ignore that the volume on the SPY was certainly there on the sell side. Once again, CCI obviously oversold. And now if I look at the 4-hour chart, I'm going to look at the 4-hour chart. Yep, pretty much your supplies, your support zone is going to be about the 395 area. So definitely some volume gaps here. That's not looking very good for SPY. So watch out for that going into this coming week. Let's go ahead and take a look at the weekly on SPY. Once again, if you look at these shooting star here, shooting star here, this shooting star worked out very well for the bulls because why? It created a brand new low. All right. Whether or not this is going to make a new low, we'll see. Weekly support, there is some weekly support here. And this area here, the 390 areas, is going to be a contested area for the bulls. All right. So this is typically the area of break. This was the area of breakout. look for that to become support. Okay, some support resistance flips going into this coming week and the following weeks as well. Tesla. All right, let's take a look at Tesla on the weekly. As you know, they split their stock effective Thursday, Friday morning. All right. So far, not so good. Okay. Shooting stars on the weekly. If this starts pulling back into this channel, watch out. That is a 34% dip from where we are at the current levels, which will bring Tesla to about 187, 188 area. That's pretty insane to think, knowing that, obviously we're all thinking about Tesla as a $900 stock now that it's under 300. It's kind of crazy to think, but this is a gigantic bull flag, right? And if you take a look at this, it is a bull flag on the weekly. If we go over to the daily, it's a little bit more pronounced bull flag here. Okay. Obviously it hit the top of the channel and boom, we're coming back down the channel. Downward target here going into Monday here. This area right about here, about the 285 area has got to hold. Okay. 285. If the 285 doesn't hold, all right, I'm looking for, there's no gaps here on the daily, then this would be the 279 area would be a contested area for the bulls here. So downward target for Tesla, 285, 279, or else if it holds this area, okay, it's going to flip around here. There obviously any bad news can send us lower, or any great news can also send us back up. All right. So Tesla, interesting going into this coming week. All right, let's talk about Apple. All right, I got a few more tickers, and then I'll hop over to questions for you guys, and we'll talk about that. Apple has a magnet of a gap down, or a gap down to the 157 level. Right now, it's at 163.62. I'm sorry, 162.47, and the aftermarket dipped another $1 in the aftermarkets on Friday. All right, so we are pretty much at the EMA 34 on the daily. Yes, EMA 34 on the daily. Look for this area to hold on Monday. All right. If it doesn't, then it's going to start coming into the EMA 50 at 159. And boom, there you have it. The gap is going to get filled. So my weekly for now, if the market does not bounce on Monday, then you're likely to see Apple start moving towards this dip. So downward target of 157.54. That's Apple. Okay, let's talk chips, Nvidia. All right. Now, we played Nvidia 180 calls on for earnings, and it did hit. It hit the next day, 179.20, squeezed. All right. I mean, it was just saying it dipped down to 164 pre-market. I'm sorry, after hours when they dropped their earnings and jumped to nearly 180, and it just got killed on Friday. All right. We have a gap here, 157.90, high volume selling. All right. So this is going to be a key area to hold. Is it going to be one of those gap and goes, gap fill and go? Or is it going to be gap fill and even much lower? So 157.90 would be the downside target if you are looking at Nvidia. 162.60 here in the on the after hours. Yeah, I guess Kathy Wood is pretty happy about her sales, but she was hating life. She was hating life on Thursday when it jumped to 180, but now she's happy, and I guess she made the right decision, etc. All right. So with that being said, all right, guys. All right, got any questions? Feel free to type it in the chat box. I think Powell went hard because he got disrespected by the market rally after his last speech. Yeah, you could be right. I mean, like I said, his comments was the most hawkish I've seen him. Usually you see Powell trying to appease the markets, trying to calm down the markets, and trying to achieve this whole soft landing thing, right? If you look at the chart and the way that he spoke throughout the June lows and going into May, etc., he would typically, when we get low, right, he would typically start being dovish, right? Around here, he started being dovish. Here, he started being dovish. So you see the market reacting. And finally, it broke out. And he was like, I guess, no, I got to put the hammer down, right? My message more direct, forceful. and rapid steps. You got to wonder what that means. Forceful and rapid steps. What other rapid steps could you take? Obviously, they still have to tighten. Okay, they still have to sell off the assets that they're holding, and we haven't seen that much of that. They said that they were going to start in June, and they haven't actually sold that much, right? And they're finally starting to sell. Okay, so yes, that QT is going to hit. But what other rapid steps are you talking about? Emergency rate hikes? I don't think so. I don't think the inflation data is signaling any need for inflation for escalatory inflation rate hikes. Okay, that it doesn't make a whole lot of sense. But using these fighting words definitely got people scared. All right. Yeah, Pogo Pike, no problem, buddy. I appreciate that. Where do you see SPY next resistance level? SPY next, you mean spot SP? I think I probably answered. You mean support level? Yeah, so support level. Yeah, 390, 390. Well, 400 psychological, right? Three. Same thing with Qs. 300 psychological supports. You guys got to consider that. If you're still shorting and you're buying puts at 400, I virtually guarantee you're going to get burned. Okay, so always consider psychological supports. QT double pace in September. Brandon Stewart, thank you. 95 billion per month. Okay, yeah. Okay, there you go. Finally, right now they're starting to sell stuff. Okay, so that credit tightening could obviously take us lower. All right, Brandon, you've been a big bear since like January, so I totally get it. All right, guys. 31 minute mark, AMD. All right, let's talk about AMD. Okay, let's talk about AMD. Same thing, right? The AMD actually had a bull flag, right? Or a bull pennant going into this week, and it held here, but nope. Try to come back into the flag. Nope. Okay, so we're back here under $91 after hours here. Downside target, if you're looking for any support levels, really is going to be. We're already at a support right here in 90.62. We're going to hit, if that fails, then you're looking at potentially $88. Okay, for AMD. AMD and Nvidia, if I could just comment on these companies, these are great long companies. And they're, I'm sure you guys realize that, right? Chips are never going to go away. Yes, gaming chips and that slow down. There's demand is cooling. That needs to be. That's what Fed wants to do, right? It wants to slow demand. So you gamers stop buying these chips and these computers. And my son wants to buy one. I'm like, no, we got to cool our demand down, all right? Or else Powell is just going to keep laying down the hammer. So, but long term speaking, all right. Could you accumulate some shares at $88 and go long in an IRA and then buy some SPY puts? I mean, my IRA grew like 25% on Friday because I loaded it with puts. Okay. So you don't have to have a TD, wherever brokerage IRA or retirement long account that you have. It doesn't always have to be fully loaded with shares. You could take some money out. Okay, I sold some Tesla shares on Friday and I bought 300 Q puts and they're up 48%. Okay, and that just added to my IRA account. So I'm up on my IRA account during this Friday downfall. So don't be afraid to do that, right? If your retirement account is fully cash, not fully cash, but fully loaded with shares, you need to consider some risk management there. Okay, you need to sell off some shares and buy some puts. Keep the ones that you truly believe in. And, AMD, Nvidia are the type of companies that is not going away. Apple isn't going away. Facebook will eventually go away. All right. Okay. Let's see. Yeah. I mean, the automobile revenue. There you go. Right. What would be a strategy for puts on dead cap bounce SPY? What would be the put strategy? Well, you're going to have to look at hourly levels, okay, like on SPY, et cetera. You're gonna have to look at some stochastics, okay, because we are deeply oversold. I would start with the one hour chart, or even bring up your trading view. Let me give you guys my trading view. Let's just go to SPY on the 2-hour chart, okay, and take a look at the regression channel. All right, these regression channels really work. All right. We are at the lows of this 2-hour regression channel. Okay. So if you watch the price action here on Monday, all right, if it goes below, yeah, you buy the puts, but don't be so naive to not think that we're going to bounce right back into the channel. Does that make sense? Because typically the way that this has fell on Friday, you can expect some bulls to jump in here back to 410. Okay. So you could see a situation where if you miss this right up, yeah, you better buy some puts here. I don't think we're out of the woods yet. There could be some ferocious bounces, some short covering rally, right? Going into Monday, Tuesday, short cover rally can burn puts. All right. So you look at a 2-hour chart, and that's the things that you have to kind of say to yourself, am I buying more puts into weakness where the weakness is starting to exhaust? Does that make sense? You're looking at your technical indicators, right? You look at SPY 1 hour, CCI is turning up when the price action is going down. What do we call that? A bullish divergence. Okay. So don't be, like I said, play the day, right? Play the day, play what's in front of you. All this stuff here that I talked about, put it behind you. All right. Market tends to move on pretty quick from bearish, from those, it will typically move on pretty quickly from the Powell comments. All right. What's that volume you have on side of the screen call on TrendSpider? Oh, this is volume by price. Okay, so on TrendSpider, volume by price. Let me show you guys. I'll just go here. You can actually, I'll show you guys 1 hour here. I'll put the values here. So you can see the volume of shares traded by price. This is volume, okay, on the day, or volume by time, volume by price. Okay. So you can see, like, sometimes if you, let's say you want to look at the SPY 2 hour, okay. Look at this, right? Heavy volume here, broke that. You see that this consolidation level from last Friday or so. All right. Throughout the week, we were chopping in this range. Look at this volume support here. Obviously, we broke that on the 2 hour. All right. We even broke the 200 EMA. And you have significant gaps. I'll give you bears that. All right. You're coming right down into this 200 SMA on a 2 hour with some support here. Okay. So this is an area where typically I think this selling should start to exhaust. All right. But if obviously 400 doesn't hold, yeah, you're going to see 398 pretty quickly. All right. Amazon. Yeah. So thank you for that question. Let me talk about Amazon. I forgot about that. I have 120. I went a little crazy on Friday. So I took 120 puts for September 2, next Friday. And they're like at 55% right now. I bought them for like 20 cents per contract. And so I bought a bunch on Friday and I'm up 57%. Yes. Gap. We're in a gap zone. Obviously, we hit that gap zone effectively, and we're probably going to break this EMA 50. If this starts breaking down, boy, 122 for Amazon. Those puts, if it hits by Monday, Tuesday, I probably have to sell by Tuesday. Too much IV and theta, but probably get 150% if it starts coming down here to 128, 129. It'll be great. Yeah. So Amazon, yes, I do think, yeah, same thing with Apple, right? Same thing with SPY. Eventually, yes, these, I don't know about SPY, all right, SPY, but I do know that the Amazon and the Apple gap is pretty darn close enough to get filled pretty quickly. One chart that I will give you guys, all right, since you guys are here, this is a bonus chart, and I'm going to give you this gap fill for snow. If things continue to deteriorate, all right, I know earnings, yeah, great earnings, blowout earnings, rejected by the 200 EMA week daily, all right, shooting star candlestick on the daily chart, lower volume, less excitement to buy snow above $200, okay? If it breaks below 184, watch out. 162 if the market continues to be bad. I would be willing to buy some monthly puts on snows to see it come back down based off this kind of formation. Of course, I know there's going to be bounces, but remember, all right, you have declining volume on this uprise, all right? Less excitement on the bulls level, all right? So sellers should be stepping in here if, let's say, 195 doesn't hold. So bonus chart for you guys, all right? Let's see. Don't chase the news. VIX needs to reject. Oh, by the way, let's talk about VIX. Thanks, Steph. All right, last chart, and we're done. 40 minutes into this webinar or this Zoom. Crazy candlestick, right? Right into the VIX. Remember, the VIX has a gap to fill at 21.29. The bears will tell you, all right, the bears will tell you gaps don't have to get filled all the time, and it won't get filled until maybe a year down the road. Because if I look at, there was a gap that was created back on here, right? Back in 2020, COVID, you had a big gap here, okay? This didn't get filled all the way until literally 1 year later. Okay. So what does that mean? All right. I'm saying that this gap, based on history of VIX, all right, doesn't have to get filled until 1 year later. But I can't see that happening. I can't see this going to 45. Like I know I had my reservations before about VIX going to 45 before a bear market rally is over or bear market is over. But looking at this, all right, if we get some good news, all right, this is get filled. You remember this gap here from June 13th lows, June 16th lows, okay? Gap here, filled 2 days later, okay? Open mind, ladies and gentlemen, open mind going into Monday, Tuesday, and this week on daily needs to pull back overbought on daily. Oh yeah, of course, look at that, right? You got the cycle, okay? Stocks oversold, VIX overbought. What do you get? All right, we've seen it before. Some bounces. Okay, again, not telling you guys my bullish, bearish bias, etc. Not forcing any opinion on you. You think for yourself. I'm here to present the facts. All right, holding on some weekly puts. Okay, guys. 40 minutes into this webinar. Thank you guys for joining me this morning. Once again, if you guys are on YouTube, etc., you have not joined us, TRT, therockTradingCode.com, please visit our website. Spots open on Monday. I'm sorry, not Monday, September 1st. Is the day that you want to join. It's a fresh new month. Again, you know, a lot of people are saying September is going to be the worst month on the year. We'll see what happens. I just think there's too many catalysts for it to be the worst possible month ever. So, you know, again, Powell comments definitely scared the living bejesus out of every market participant. But I expect some kind of bounces going into Monday, Tuesday. All right, ladies and gentlemen, I hope you guys have a great weekend and speak to you soon.